Hey guys, welcome to our video on calculating your billable rate. My name's Kristen Ingram,
And I'm Jeffrey W. Ingram.
and we are the co-host of the Small Biz Life podcast. And this video is actually a companion to episode 90 of the podcast.
The episode link will be in the description below.
But you're going to want to make sure that you listen to that episode before you watch this video, because it'll make a lot more sense if you listen to the episode. Okay, so this is calculating your billable rate if you were a service provider and you were billing out your services to customers. So there are a couple essential questions that you need to ask yourself before you begin. Are you a price taker or a price maker? Remember that a price taker is someone whose rates are set by the market. If you're a price maker, you can set your own rates.
Yeah, I mean, we all want to be makers, but some of us are takers because that's just the way the market rolls.
Exactly. So, and the more differentiation that you can create between yourself and your competition, the more likely it is that you're a price maker.
Finding your blue ocean.
Exactly. How much profit do you want to take home each month? I know this is a question a lot of people don't ask themselves, but like, what do you want your paycheck to be? That's one of the beautiful things about being a small business owner. How much are your monthly expenses? This is actually something that's pretty easy to do, especially if you have something like QuickBooks that you're using for your bookkeeping. If you've been in business for more than a year, then just run a profit and loss for a year. Take a look at what your total expenses were, divide it by 12 months.
Yeah.
If you haven't been in business for over a year, or your business is growing really rapidly, then what I would suggest is look at what you spent last month and say, okay, are there any annual expenses that aren't included in this figure?
Yeah.
Okay. And then make sure that you take all your annual expenses, divide them by 12 and add those in with the rest of your monthly expenses. What is your effective tax rate? If you look at your prior year tax return, you should either have a tax return summary or a tax comparison with prior years. And on one of those two reports, it will give you an effective tax rate. You want your effective tax rate for your federal return and, if applicable, your state return.
Yeah.
Add those two together, and that gives you your total effective tax rate.
And I think the thing to keep in mind with this sheet too, it's really good for two things. It's good for thinking about it the first time, obviously. But also, once you've thought about it the first time, it's also really important to go, what's going to happen? What does the next level revenue look like for my company? And then, how many billable hours can I build up? Or can I change my rate? What can I do to get to that next level for my company?
Right, exactly. And you can also do an exercise similar to this, like if you're looking to hire employees and you're going to be billing out their time, or even if you're going to hire administrative people to support you, how much is that going to add to your monthly expenses? Is that feasible?
Do you have room left over to put them to maintain your profit?
Exactly. And then how many billable hours do you work each month? This can be an average. I know some of us, as a tax accountant, I have a lot more billable hours during tax season than I do the rest of the year. So, you're going to want to figure out kind of what your average is.
That's why that annual profit and loss, if you've been in business for a year, is really the way to go.
Right. And if you have, you can also use like a minimum, so you can say, okay, there are some months that I bill out, 200 hours a month, but there are a lot of months that I only bill out like 80.
Yeah.
So, use the 80. And then in those months that you have 200, you're going to be packing in extra profit and extra cushion in your business. Okay, so if you're a price taker, we're going to walk you through the calculation of how to figure out how much you have left over to spend on expenses. Now, remember that with both of these models, we're thinking about profit before we think about expenses. The goal here is to solidify your profit and make sure that you are getting that profit on a continuous basis. So if you're a price taker, you've got to ask yourself, what is the standard hourly rate for my industry? And there's a couple different ways you can determine that. You can look at your competitors' websites, right? You can have somebody do some research for you to figure out what other people are charging, do some inquiries, and do a lot of them. I know a lot of industries actually have industry surveys. I know lawyers do this. I know accountants do this. What do people charge per hour in your industry?
And especially if you're a local business, you have to think about it in your industry, in your area, because someone who does an equivalent job in a high cost of living area is probably going to have a higher hourly rate.
Exactly. And that's one thing that's kind of nice when they do the CPA surveys is they break it down by, okay, add this much if you're in a city, subtract this much if you're in this geographic region. So it's kind of cool how they do it. And then how many billable hours do you work each month? So what we're going to do is we're going to calculate your total revenue for the month. So total revenue is rate times hours.
That's, once again, billable hours. You will be working more than this, but these are the hours that you have doing the work for your clients that brings in the revenue.
Right, exactly. So let's say that the standard hourly rate for our industry is $105 an hour, and we have 100 billable hours per month. You're probably going to work a lot more than that, but that's what we're going to bill out. That's what's going to bring in the revenue. So we've got revenue of $10,500 for the month. So now, instead of looking at your expenses, let's say how much profit do you want to take home each month? So let's say that it's $5,000.
Yeah.
Now, don't forget that if you want to take home $5,000, you have to make more than that to pay for your taxes so that you can actually take home the $5,000. I think this is a big mistake that a lot of small business owners make. They go, "Oh, I made $5,000 this month," and then they take it, and there's no money for taxes. So let's say that you looked at last year's tax returns and your effective tax rate's 30%. To calculate the total profit you need so that you can actually take home that $5,000, you're going to take your desired take-home pay and you're going to divide it by 1 minus the effective tax rate. So it's going to give you a decimal. Whenever you divide a number by a decimal, you're going to get a bigger number. So what this is going to tell you is it's going to tell you how much you need to pay your taxes and take that profit home.
Yeah. And my suggestion too is if you are starting off and you're not sure what your effective tax rate is, kind of go off the revenue and just say, okay, sort of guesstimate off of the total what that's going to be, because you kind of want a worst case scenario.
Right. So I think for a lot of people, unless they're really high income, 30% is probably a decent number to use.
Yeah.
Talk to your accountant and ask them, because they can probably find that number really easily for you. Okay, so let's look at what this calculation looks like. So my total profit needed, I'm using the $5,000, and then I'm doing 1 minus 0.30. So that gives me 5,000 divided by 0.70. So basically what that tells me is whatever the total is that I'm taking home, or whatever the total profit I have is, 70% of it I get to keep.
Yeah.
Okay. So that means that in order to be able to take home that 5,000, I need to generate $7,143 in profit.
And this could have been 100% minus 30%. Same thing. Just think of it that way. Just remember, percentage are decimals.
Exactly. Ooh, we're mathing. That's why if you're watching this and you're one of our HQ members, you actually get a spreadsheet that Jeff made that will do all these calculations for you. If you're interested in finding out more about Small Biz HQ, which is our monthly membership site for small business owners, you can go to smallbizlife.com/HQ, and we'll make sure we put the link in the description of this video. So I am also a huge fan of making sure that you have a GUE account.
Yes.
And GUE stands for Growth, Upgrades, and Education. Okay. And this is something that, as your business is growing, you need to set aside money to upgrade computers, buy new equipment,
Industry
grow.
conferences.
Right. Conferences, other types of education. And I think a lot of people think like, wow, $10,000 per year is a lot. But if you think about it, it's really only $833 a month.
Yeah. And if you have HQ as well, it would only take that $833 down a little bit. So you still have a lot left over.
That's very true. Okay, so how much can you spend on expenses? So if my revenue's 10.5, we said our profit and taxes were 71.43. My savings for GUE is 8.33. So that means that because I can't control how much I charge per hour, I have to make sure that my expenses fall in line, and I can only spend $2,524 a month on expenses.
Now, we are big fans of controlling expenses, but you have to understand, if you're a price taker, this will destroy your business if you don't.
Right, because what happens is either you are not going to pay yourself enough, or you are going to pull money from your tax fund, or you're not going to create that GUE account. Okay, so it's critically important that when you figure out this number, that 2524, that's your budget. You know, and so you might have to look at, you know, maybe the space you're renting is too expensive. Maybe, you know, you wanted to move into a space, but you're like, you know what? I'm not there yet. And in the podcast episode, we actually talk about some ways that you can increase your revenue, okay, at the end of the episode. So definitely make sure that you check that out. Okay, now if you're a price maker, this calculation looks a little bit different. So if you're a price maker, okay, you need to think first again about how much profit you need each month. And we're going to use the same numbers from the previous example. So we're going to use that 71.43, and that's broken down into 5,000 for profit and 21.43 for taxes. How many billable hours do you have each month? So we're going to use the $100 or the 100 hours from the previous example, and divide the total dollars by the billable hours. So in this case, if I take the 71.43 and divide it by 100, that is $71.43 per hour.
So that'll essentially be your tax rate and your take-home pay.
Exactly. So if you kind of think about it, so it'd be $50 for take-home pay and then $21.43 for taxes. How much your average monthly expenses? So notice in this case, we're not calculating the monthly expenses. We're actually saying, okay, here are my monthly expenses, right? And we kind of talked about how you can go through and get those. So let's say it's $3,000 a month. We're going to divide again. So 3,000 divided by 100 is $30 per billable hour. And so that's nice because you know that that's built into your rate. Okay, and then we're going to put in the amount for GUE. And I think, you know, it's funny because even being a math person looking at this number, it was kind of shocking to see how small it was. So if we use the $10,000 per year from the previous example, that's $833 a month. And if you have 100 billable hours per month, that's $8.33 per hour.
Yeah.
So think about that. So maybe, you know, maybe you're trying to pay off a whole bunch of debt. Like maybe you have $10,000 that you owe on your student loans. $8.33 per hour would pay off that $10,000 student loan in a year. That's crazy.
Yeah.
If you think about it. Okay. It's really not a lot of money. Okay. So now let's add it all together and figure out your billable rate. So we said $71.43 for profit and taxes. We said $30 for expenses and $8.33 for GUE. So that gives you a total billable rate of $109.76. And nobody's going to charge $109.76 for the hourly rate. So we're just going to round that up to $110. Okay, so that covers your profit, your taxes, your expenses, and $10,000 a year for growth, upgrades, and education. Like that's like...
Actually, the count would be even probably a little bit larger in the way we do our math, because we'd probably take the rounding difference when you figure out the revenue. There's going to be a few extra dollars. I'd probably just chuck it either in my profit, but then my taxes go up, or I would chuck it in my business savings account.
Right.
And really, GUE should be put into an actual savings account for your actual business until you're actually going to spend it.
Right. So let's talk about that. So, all right. So breaking it down on a regular basis, whether you want to do this, you can do this weekly, you can do this bi-weekly, or you can do this monthly. Okay. I kind of like the idea of, it depends on your cash flow, right? And how the money's coming in. this is something that you might want to do like every 2 weeks. But what I do is I look at the money that I collected since the last time I did this. And if you're using something like QuickBooks, or even if you're using something like, like PayPal for your billing or Stripe for your billing, I'd highly recommend something like QuickBooks. But you can run a report on revenue collected by item. Okay. And so your items are going to be your service items, right? And how much you're charging. So it will tell you how many hours you've collected in the last 2 weeks. Okay. If you do the report on a cash basis. And so you can look at that total. So let's say that you collected 20 hours worth of revenue in the past 2 weeks. Well, I'm going to take $50 per hour collected times 20 hours, which is $1,000. And I am going to write myself a check, and that's my paycheck.
Yeah.
And then I'm going to take $21.43 per hour times the 20 hours, and I'm going to set that aside for taxes. I'm going to take $8.33 per hour, and I'm going to set it aside in my GUE savings account. And then whatever's left in the account is there to pay your expenses.
Yes.
And the reason that I like, I pull out my profit that I want to take home. I pull out my money for taxes. I pull out my money for my GUE. If you do this on a regular basis, you are forced to manage your expenses. Okay. It's going to help you not overspend because you don't leave all that money in the account. And one of the reasons I think small business profitability is hurt so much is that we leave that money in the account and then we say, oh, well, I'm going to run $1,000 worth of Facebook ads. And then you can't pay yourself.
Yep, because you jump the gun and actually spend money that was planned for either the GUE or your pay or your even worse taxes.
Right. So I think this is a really great system. It is super simple. There are other systems out there that require like 7 to 9 bank accounts to pretty much do the same thing. This is a much easier way to do it.
Pay for this information. We're just giving it to you for free.
Exactly. Right. Because we want you to be a successful business owner. Yeah. We want you to make lots of money and subscribe to Small Biz HQ.
That's right.
So if you have any questions about this, you can leave them in the comments for this video. You can also, we'll put a link to our Facebook group. You can join our Facebook group and check us out there. But thank you so much for joining us, and we hope this really helped. Have a great day.